Our final question, gentlemen, we'll start with you, Congressman, on banking reform. What is the proper role for the federal government and specific proposals?
You guys have got to remind me of this, okay? The proper role is not what Barney Frank believes the proper role of government is in our banking system. As you know, I've strongly opposed, as all House conservatives did, his bill that would have government intimately involved in your financial decisions, that it would raise credit card costs and the cost of capital, which drives American economy. And in this bill, they enshrine the philosophy of too big to fail. They actually create a permanent bailout fund to take and undergird companies who take risky decisions. Well, if companies know they're always going to have taxpayers to bail them out, they're not going to watch their risk. They're not going to make wise decisions. They know you'll always do it. So I have opposed that, and we're going to continue to oppose it. I oppose the banking taxes that President Obama has proposed. If you raise bank taxes, you really think it's going to lower your credit card rate? It's going to make your small business loan more affordable? You and I know that's not happening. I'll finish with this. We have a commercial real estate crisis approaching of major proportion. From my role in Joint Economic Committee, we've worked a year now on legislation that would address the commercial real estate crisis. You know where we start? Get the federal banking regulators, get their foot off the throats of our local banks so that they can loan to performing loans, to those who are cash flowing, so you don't create a crisis where one doesn't exist. The proper role of government is not to stop development at the local level. In Texas, we are a developing state. It is to encourage that with sound underwriting and sound principles.
Goes back to history. Adam Smith, founding of our country, all those principles still apply, just like our Constitution still applies. Limited appropriate regulation. The more we limit this, the more that the government steps in and tries to control things and then bails out, the further we get into a hole. It's all the same principles. It's all the same fiscally responsible principles. We don't need a new bank tax. I have a saying, too big to fail is too big to succeed. Adam Smith's principles of economics and the wealth of nations, wealth is only generated by productivity, increased in productivity. It doesn't increase by increasing debt. Money does, but you see the value of each dollar goes down, as I just discussed. But those principles of the free market, Adam Smith says there will always be smaller businesses that will step in and take up the business that these great big businesses that have mismanaged. That's why small business is so flexible and so accountable. Accountability is important. Once you get so big, too big, and there's too much bureaucracy, you lose accountability. And then you start looking to the government for bailouts. Well, guess what our government's gotten? It's gotten too big. It's gotten unaccountable. We have to shrink the size down, let the businesses fail if you get too big, if you don't manage your own business. As a small businessman, I've been in it for 10 years. You know, if I fail, I fail. Nobody's coming running to bail me out. If I make a mistake, I pay for it. Accountability is important. Holding people accountable. We don't need more regulation. We need to let them fail.
I think it's funny that this is even a question. What is the federal government's role in banking? Last time I looked at my Constitution, it wasn't even in there. And it's pretty short, the Constitution, and it's pretty easy to read on a day-to-day basis. And I don't keep getting new editions every day in the mail like a newspaper, so I'm pretty sure it doesn't change that frequently. Banking should not have even been touched by the federal government to begin with. The only reason that the federal government has anything to do with our banking sector is because you guys and me as voters have allowed that to happen. What do we need to do to get the federal government back out of our banks? We need to get rid of the people who are okay with the federal government being in charge or sometimes bailing out our banks. Mr. Brady voted twice for the Toxic Asset Relief Program. Twice. And both times he knew that people in this district didn't want the government to be involved with those banks. The Constitution said no. The people of this district said no. Conservative principles in general, without any of those other things, say no. Where was the justification for that vote? Why is the federal government involved in our banking at all? I don't care who the subcommittee chairman is or whatever. They don't even need to be there. Let's just get rid of that subcommittee altogether and just go with the free market. Let's just go with letting the banks fail that don't do a good job. Why bail them out and then keep the same business leaders with the same business principles in the same positions so that we can just prolong the problem for another 10 years? I guarantee you, 10 to 15 years from now, we're going to have the exact same problems with those banks because they're continuing the same bad practices. And what is Congress proposing? More regulation for those banks, which is only going to make it worse. We've already seen what happens when they do that, and it needs to stop. We need to put an end to that immediately.
The proper role of the federal government in dealing with the banking industry is first and foremost not to bail them out when they fail. You know, I'm a journalist over in Dayton and Liberty, and there's a bank over there. And this bank, a locally owned bank, started in 1913. I wrote an article about them because they got this recognition by TheStreet.com. They were in the top 4% of all the banks in the United States. And I know I was interviewing the president of that bank, and I go, wow, you know, you've gotten this award before, sir. And he goes, well, Franco, he goes, we've actually gotten this award every quarter for the past 10 consecutive years. And I go, wow, how is this little bitty bank in Liberty and Dayton able to do so well? And he goes, well, I'll tell you a little secret. We loan money to people who can pay it back. They figured that out, you know, this little bank. And so he goes, you know, we don't have the problems at these big banks in New York that needed bailouts because they loan money to people who can pay it back. And he also told me that in the last 30 years, you know how many foreclosures that bank has had? Approximately 6. 6 foreclosures in 30 years. That was through the oil bust, the real estate bust, the recession of the 90s. That is what we need. Banks who cannot turn a profit, operate in a bank, need to get out of the banking business. They needed to fail. If my bank, who holds my mortgage, fails, does that mean I get a free house? I wish. No, there will be another company that buys that bank out, and I'm sure my mortgage payment will still be due the next month. It was absolutely absurd to do this type of bailouts for banks. So starting with what is the proper federal role, it is not to bail out banks that fail. Let them go out of business, and let the little banks in Liberty and in Dayton, Texas, buy up these New York banks and teach them how to bank.
Okay.